We will walk through the essential annual tax settlement dates in Denmark so you can stay compliant, avoid penalties, and manage your cash flow with confidence. Whether you are an employee, a self-employed professional, or a business owner, the Danish tax calendar has a clear rhythm, and understanding that rhythm is the first step towards staying ahead of your obligations. We will move through the year chronologically, highlight the key deadlines that matter for most people, and share practical suggestions for how to prepare. While this is not formal tax advice and individual situations can differ, it will give you a robust framework for planning. The Danish tax authority, Skattestyrelsen, builds the year around the annual tax assessment, known as the årsopgørelse, and the preliminary income assessment, the forskudsopgørelse. These two documents are the backbone of your interaction with the tax system. The årsopgørelse looks backward at the year that just ended, summarizing your actual income, deductions, and final tax position. The forskudsopgørelse, on the other hand, looks forward, estimating your income and deductions for the coming year, so that the correct tax is withheld on an ongoing basis. Being on top of the dates related to these two assessments will dramatically reduce the risk of surprises. The first major checkpoint in the tax year typically arrives in early March, when the annual tax assessment for the previous year is released in taste selv on ragnum.dk. At this point, Skattestyrelsen has already received information from employers, banks, pension providers, and other institutions, and they use this data to calculate whether you have paid the right amount of tax. For many employees, this assessment will be largely accurate, but it is still your responsibility to review it. In practice, this means logging into taste selv with your Meet ID as soon as the årsopgørelse is available, checking that your salary, interest income, pension contributions, and deductions are correctly recorded, and comparing them against your own records. If there are errors or missing information, the period immediately following the release is your opportunity to correct them. You can update figures directly in taste selv for elements such as mileage deductions, trade union fees, unemployment insurance contributions, or certain work-related costs, depending on what you are eligible for. Typically, if you make corrections shortly after the initial release in March, any resulting changes to your refund or tax bill will be processed relatively quickly. For individuals who are due a refund, payouts often begin in April, assuming there are no complications such as outstanding debts that need to be offset. This is one of the reasons why it is worth reviewing your assessment promptly. Accurate data plus early action means faster access to any money owed to you. For those who owe additional tax for the previous year, the timing of your payment has a direct financial impact. In Denmark, interest and possible surcharges apply if you pay too late or if your underpayment is discovered after certain cutoff dates. There is usually a key deadline in early July that determines how your underpaid tax is treated. If you settle your outstanding tax before that July deadline, you typically avoid the larger, more punitive charges and may only pay a lower interest amount that is built into the final calculation. If you wait and pay after that deadline, or if the underpayment remains when Skattestyrelsen finalizes the year, you can expect an additional surcharge on top of the standard interest. From a planning perspective, this means that as soon as you see your årsopgørelse in March, you should form a clear view of whether you are likely to owe money and then decide how you want to handle it before the July cutoff. Many high earners and self-employed individuals in Denmark adopt a disciplined approach by setting aside funds each month specifically to cover potential underpayments, rather than treating the tax bill as a surprise. Beyond these key spring and early summer dates, your focus should shift towards staying current during the ongoing tax year. The preliminary income assessment, the forskudsopgørelse, typically becomes available in November for the following year. At this point, Skattestyrelsen estimates your expected income, deductions, and withholding for the coming calendar year. This is a critical moment for anyone whose financial situation is changing. If you expect significant variations in your salary, bonus, rental income, investment income, or deductions, it is in your interest to update the forskudsopgørelse as early as possible. Doing so spreads the tax impact evenly across the year, reducing the chance of a large bill when the year is later reconciled. Instead of viewing November as a one-off event, Think of it as the beginning of an ongoing process. Throughout the year, you can log in to Taste Self and adjust your forskuddsopgørelse when your circumstances change. For example, if you start a new job with a higher salary, purchase a property with mortgage interest deductions, or begin earning income from a side business, you should not wait until the following March to reflect those changes. Prompt updates help ensure that your tax withholding remains aligned with reality, which is especially important if you operate close to tight liquidity constraints. While these high-level dates are consistent for most individual taxpayers, there are also specific timing considerations for the self-employed and for companies based in Denmark. Self-employed individuals may need to follow additional deadlines related to VAT returns, withheld taxes for any employees, and advance tax payments. For many businesses, VAT is reported monthly or quarterly, and missing those dates can trigger penalties and interest. Corporate tax returns are typically due a number of months after the end of the financial year, and there are installment dates for advanced corporate tax payments that can offer financial advantages if managed proactively. Even if you are not directly responsible for corporate or VAT filings, being aware of these timeframes helps you coordinate effectively with your finance team or external advisors. To make all of this manageable, it is helpful to create a personalized tax calendar that integrates the Danish statutory dates with your own financial cycle. Start by marking the release of the årsopgørelse in early March and blocking time in your calendar for review within that first week. Add a reminder ahead of the early July deadline to evaluate and, if needed, pay any underpaid tax to minimize interest and surcharges. Then, set a recurring appointment in November to review and update your forskuddsopgørelse for the coming year, using your best estimate of income and deductions. If you are self-employed or involved in a business, include the relevant VAT and corporate tax deadlines as well. Many people in Denmark also coordinate these reviews with other financial milestones, such as salary reviews, bonus payments, or mortgage refinancings, to ensure that tax implications are not an afterthought. In summary, beating deadlines in the Danish tax system is less about reacting to last-minute pressures and more about understanding and leveraging the annual cycle. By focusing on 3 anchors, reviewing your annual tax assessment in March, addressing any underpayment before the July cutoff, and proactively updating your preliminary income assessment in November, you put yourself in a strong position. This approach reduces the risk of penalties, improves cash flow predictability, and supports more informed financial decisions across the year. As always, if your situation is complex, involving cross-border income, multiple business activities, or significant investment portfolios, it can be worthwhile to engage a professional advisor familiar with Danish tax rules. But regardless of complexity, the core discipline remains the same. Know the key dates, prepare ahead of them, and use the tools provided by Skattestyrelsen to keep your information current. By following this structured approach, you can navigate Denmark's tax calendar with clarity, confidence, and control.